Welcome back, everyone. Great day so far at our Emerging Growth Conference. Happy to introduce our next presenter. We have VOX Royalty Inc., trades on the OTCQX under the symbol VOXCF and on the TSXV under the symbol VOX, and is a returns-focused precious metals royalty company with a portfolio of over 50 royalties and streams spanning 8 jurisdictions. Please welcome its CEO, Kyle Floyd. Welcome, Kyle. How are you doing today?
Thanks, Anna. I'm fantastic, and thanks to the Emerging Growth Conference team for having us. I'm excited to present our company. I think our investors and newer investors are finding us at a very opportune time.
Perfect. Take it away, Kyle.
Well, thanks. Well, for those of you that don't know VOX Royalty Corp, I'm excited to tell you about what a royalty company is and how even despite this very uncertain economic backdrop with high inflation, how VOX is very, very well positioned in the investor marketplace to represent a very, very good opportunity at present time. Please note the forward-looking disclaimer. I will be making forward-looking statements. For those that are not aware of royalty companies, the simplest way to boil it down is it's a hack in the commodity investing sector. Royalty companies are uniquely positioned because we get the benefit of a rising commodity price cycle, which is what we're finding now. Metal prices overall as a basket are up significantly over where they were 5 years ago, 3 years ago, and very recently, there's been some very meaningful moves in the metal prices. That being said, we're not exposed to the cost inflationary pressures that are afflicting companies all around the globe and very acutely mining companies. So we get the benefit of an inflationary cycle driving commodity prices north without the deleterious impact of cost inputs rising, which they are significantly for mining companies and everyone else alike, just as they are for consumers. And so in this very difficult investment climate, you're finding a company that is harnessing this inflationary environment to its benefit and for the benefit of our shareholders. And I think that's a really important characteristic to point out right now because there's a lot of investors that are uncertain about where to put capital into what companies to put capital in, given the risks that there are in present time in the markets. But VOX is harnessing what is a challenging economic climate and an inflationary environment. And we're showcasing that within the results that we're producing and the progress that the company is making for our shareholders. So a royalty company, what do? We buy third-party royalties over mining projects all around the world. Many of you would be familiar with this in the oil and gas sector. So just like oil and gas, where there's royalty holders over various tenements or concessions of land, that once a major E&P company takes over that land and produces, those payments get made to the royalty holder. That's what VOX looks for, only in hard rock metals all around the globe. And we've built what's one of the most interesting and powerful portfolios of royalties in Western Australia, which is the best mining jurisdiction on the planet. So royalty companies have outperformed essentially every commodity-based benchmark you can compare them to over the last 2 decades and through almost every cycle. The royalty companies have outperformed by magnitudes over owning physical, over owning the miners, and have even outperformed the S&P 500 significantly over that period of time. VOX harnesses the best aspects of those major royalty companies that have outperformed, and we are able to deliver that within our portfolio with much more leverage than what you're seeing in the major mining companies and major royalty companies. The royalty model is very unique in that it harnesses a revenue interest, so the top line generating capacity of a mining operation. We're not the operators, so we don't have the fixed operating costs. We don't have the capital costs, but we get all of the benefit of exploration upside. We have tremendous asset diversification, tremendous scalability, and we do not get affected by the cost input side of the business, which is under immense inflationary pressure. So we get all the upside that mining companies generate with far less downside, and it's a very capital or asset light business. We are not running heavy machinery. We are not paying big staffs of employees. We are able to look for deep value owning these third-party royalties that entitle us to the revenue generating capability and the revenue generated by these mining projects all around the world. VOX has been one of the fastest growing royalty companies over the last 3 years, but what's important to note is the value that we find in buying royalties. We have a systematic approach to finding third-party royalties all over the world with a particular focus in Western Australia, which for many of us as North American market participants don't realize how good that mining economy is and the generative capacity that it has in terms of yielding alpha in the industry and alpha for our investors in terms of the royalties that we acquire. So we are a precious metals focused royalty company. Most of our net asset value is precious metals. That being said, we have developed a portfolio that spans from iron ore to copper to lead to zinc and vanadium even. So we're very well positioned even in the battery metal sector. We have a very diverse set and suite of royalties. Importantly to note is the growth in producing asset count. So when we went public just 2 years ago, we were founded almost 10 years ago. We had just one producing asset. That's now grown to 6 producing assets, and we expect double digits as we exit 2023. Those are some of the biggest value unlocking catalysts a company can have in our sector is when an asset goes from pre-production to into production. That's really crystallizing a tremendous amount of value for our shareholders. Very low geopolitical risk. Many of the investors listening today, it's important to be in low geopolitical risk categories. With this inflationary environment, you're seeing emerging economies suffering all around the world, making it very difficult to operate any business, certainly a mining company within that. With our exposure being mostly Australia, Canada, and the US, we're very well positioned from a geopolitical standpoint. We're in the strongest mining markets in the world, and we're seeing that provide tremendous benefits to our shareholders, both in terms of just the stability of these regions, but also in the profound amount of investment that they're realizing that's moving our mining projects that we have royalties over ahead of schedule and developing better results than we expected. As I noted, we're delivering an industry-leading growth rate, but it's not the growth rate that matters to us. It's the value that we're acquiring royalties. And there's not another company that compares to VOX Royalty Corp that's come to market in the last decade. The only thing that would be comparative to VOX and what we're doing now is what Franco-Nevada, who's the $30 billion largest player in our industry, what they did in the late 80s and early 90s, finding third-party royalties in Nevada, where a lot of their value that they generated was sourced. So what makes VOX Royalty Corp so different and so profound in terms of our ability to generate value for investors? We have been a company focused for more than 10 years on finding value in the commodity sector. And how do you do that? The best way to do that is through a royalty vehicle. And then we have synthesized the best elements of royalty companies into one business. And so what underpins that success and the capability that we've so very clearly demonstrated and validated for our investors is that we have intellectual property that underpins our ability to source deals in uncompetitive situations. That's allowing us to, one, find where the royalties are in the first instance, and then two, be able to get in front of those royalties in uncompetitive processes. So where most of the transactions in our space, also in the oil and gas space, are banker-led processes, making sure that the royalty company is paying top dollar. We are finding unique situations where we are providing liquidity to sellers or are finding royalties that in some cases the owners didn't even know they had, or in certain instances as well, royalties that are buried within shellcos and subsidiaries where it's an opportunity to go find something where the owner doesn't necessarily want to hold it anymore. So we're finding these situations that allow us to find very, very deep value. Our technical team at the front lines of our business is ensuring that we're finding the right quality of assets. We're pricing the risk and we're pricing in the return potential of these royalties as good as anyone in the industry, and frankly, far better than most. We have 2 mining engineers and 2 geologists on our team. That allows us to really understand the technical issues and the technical opportunities with the assets so that you don't have to. There are a lot of mining companies, a lot of companies that come out and speak to investors about what might be going on with their companies, but it's very hard for you as an investor, not having decades of experience in the commodity sector, not being a mining engineer or geologist, to really understand what the risks are and what the returns are at a technical level. We do that for you. That's part of the benefit of our business and owning VOX Royalty Corp is we're doing that hard work. We have the capability and the capacity to do that as well as anybody. And we have the validation that we have continued to find very deep value in the sector, providing both current return and very significant long-term optionality within our portfolio. And that is showcased by the accretive deals that we've been able to do both on a net asset value and on a cash flow basis, where most companies in our space fall down on one of those comparative metrics. I touched on the progress that we've made since we've been public. We went public in May of 2020. I founded this company back in 2014 to be the outlet for investors, especially in this type of inflationary environment, that say, hey, I would like some commodity exposure within my portfolio. I don't know mining companies, I don't understand them. In some cases, you don't trust them. We built this business to harness the best components of owning commodities into a royalty model, and then took the best qualities of royalty companies and made sure that was synthesized into our business, and that's what we captured. So we have delivered some of the most exciting growth in the industry. That continues to project, by the way, but you can see the growth from the royalty's own perspective, going from 5 in 2019 to 59 today, with more in the pipeline. That's a testament to the IP that we acquired in 2018, which is the largest proprietary database of third-party royalties over hard rock mining assets in the world. We bought that royalty database for $2.1 million. It felt like a lot of money at the time, but I'll tell you, it has been the best investment we could have made for our shareholders, and it's paid off very handsomely and continues to do so. Our revenue growth, very important. There's a lot of mining companies that investors get exposed to that are pre-revenue. Pre-revenue is very hard to understand. If you're not a geologist, it makes it very difficult to understand what is going on with those mining projects. We have de-risked this business significantly by driving the revenue growth that we're currently experiencing. You see, when we went public, we were at that infancy in our revenue growth. We told investors that revenue growth was coming. That's on the back of these producing assets coming into production and generating the royalty receipts to us. So we went from 0.1 to 4.6. We've then recently come out and doubled our guidance again. We've doubled guidance in each of the preceding 2 years. That is on the back of us validating our ability and our management team validating its ability to find very, very good value on the invested capital going into purchasing royalties. You also see the net asset value per share growth. We went from $2.55 per share to over $4.59 per share based on analyst consensus estimates. What I will note is our share price is essentially flat over the last 2 years. So you still have the opportunity to essentially get in at the ground floor. We are doing a number of things that I believe are going to unlock value and will showcase the value that we're building for shareholders, which will ultimately get rewarded within our share price and our valuation. Something to note, and I think it's very unique, and for most of the investors listening, you'll also appreciate that this is unique. Management owns 15%. We put our hard-earned money into this business. We've been in this industry for over 10 years, almost each as a team, combining for almost 50 years of royalty expertise. It's one of the most deep transactional teams in the industry, with over $1 billion transacted in the royalty world and immense technical capabilities. And we are invested alongside you as the investors to this company. We own approximately 15% as a team. We're extremely aligned, and in an industry that is notorious for agency issues in terms of management not being aligned with its shareholders, we are quite the opposite. And I'll tell you that guides everything that we do. And I'm very excited about how our company is positioned to continue creating value for our shareholders. Some of the who's who in terms of the most known and well-known and well-qualified mining investors have recently taken stakes in VOX Royalty Corp. They understand the value that we're generating. They understand the competitive advantages that we bring to this industry. And they're also equally as excited as we are about the prospects of this company going forward and the value that we're expected to deliver for our shareholders. This is a very quick snapshot of some of the royalties that we have within our portfolio. Again, it's that immense embedded growth that we have that I think really stands out across this industry and really should stand out to investors in terms of the value that's going to be driven. We've gone from 1 producing asset to 6 producing assets. We believe that we're going to be at double-digit producing assets as we exit 2023. That's an extremely catalyst-rich time for VOX Royalty Corp and our shareholders. That is tangibly the most value accretive and the clearest crystallization of value realization for shareholders when these assets come online. This type of portfolio that's generating these types of returns is completely uncommon in our industry. And again, is starting to get the attention of many of the very significant investors in our industry that are commodity specialists. But I believe that we project better and are better suited even for the generalist investor because we're doing the hard work on the front lines for you. We have what we believe is the best business model to get commodity exposure with a technical team on the front lines finding the best assets underpinned by a competitive advantage that no one else has in this industry. So as I noted, it's this growth in producing asset count. These are assets coming online where VOX Royalty Corp does not have to contribute another dollar to the operations of these mines. In fact, we typically have not contributed any money to the operations ever. We're finding the third-party royalties that exist at very, very good value. So we're completely independent of the capital costs, the input costs, and all the myriad of challenges that mining companies face in terms of bringing assets into production and then maintaining that production profile. We get to sit back and we get to collect the royalty checks. And based on making very good calculated investments over the last decade, we stand in a very good position to realize on those as our revenue continues to build and the producing asset count continues to build. We also have what I believe is the deepest pipeline in the industry, our ability to secure very interesting royalties in uncompetitive processes continues to bring value. So what we have now is immensely valuable and not reflected in our share price, let alone the royalties that are coming online and the new pipeline of royalty deals that we expect to bring to the market over the coming quarters and coming years. So you may be asking, well, how does this compare to the rest of the industry? There's multi-billion-dollar companies in our industry like Franco-Nevada, Royal Gold, Wheaton Precious Metals. We compare very favorably in terms of the relative valuation. And I believe that this is going to, what they say in the industry is re-rate. I believe that the market is going to essentially be forced to realize the value that we're creating and re-rate us towards the left side of these charts. We're undervalued in every key metric, yet we've really validated our ability to find value, unlike many others in this space. And so over the coming years, over the coming quarters, we're very excited about this growth that we will continue to bring, and ultimately what that does to our valuation. In terms of catalysts, why VOX, why now? We've talked about the market and how challenging it is, and the rising interest rates and the inflation that is making it very difficult to pick assets and pick companies to invest in. Let me remind you, VOX is harnessing this cycle. VOX has benefited from the cycle. Commodities have been historically over the last 9 inflationary regimes the best performing asset class. We, as a royalty company, are extremely well positioned within that. And then as a royalty company, we believe we've synthesized the best qualities to present you, an investor, a very streamlined, efficient approach to getting commodity exposure. Our producing asset count, again, growing significantly. We continue to be very disciplined in what royalties we acquire. We're finding royalties 2 to 3 years out from production, bringing those in at tremendous value, and then those are re-rating in terms of the value that they bring to our investors within the portfolio. That's called organic growth, and we're leading the industry in that capacity. We expect additional research coverage. We expect additional liquidity. We have submitted a 40F, so we are looking for a NASDAQ listing. Currently, we're on the TSXV and the OTCQX. We believe a NASDAQ listing is going to tremendously help our liquidity and also help our investor awareness. So we're excited about what that will bring to the table. But again, this growth is really underpinned by this producing asset count increase, and that is where you see revenue also really increase. So we give investors both very significant current return and also within the company, and also very, very quality long-term optionality to metal price movements, reserve increases in production, without having to be on the hook for the capital costs. So with that, Anna, I will kindly hand it back to you and open it up for Q&A.
Great job. Okay, we do have some questions for you from John Ortega. When you're buying these royalties, are they all in perpetuity, or do they have expirations?
So it's a great question. Most of our royalties are in perpetuity, and that's one of the really significant value accretive advantages of this industry, is that we get that perpetuity exposure without having to contribute any additional costs to the ongoing sustaining of that mining operation. That being said, there are a couple capped royalties in our portfolio. I'll give you an example of one that's really exciting. We bought a capped royalty on the Segilola gold mine operating in Nigeria. It's one of the very few royalties that we have in what I would call one of the more exotic jurisdictions, but we've already received payback on that royalty, and we ultimately expect to receive about 5 times what we bought that royalty for or invested into that royalty in terms of return on invested capital. That's unheard of in our industry. So while it was capped, sometimes we will buy those royalties because of the return threshold is so high and so quality and so good for our investors. But usually they're perpetuity interests. They go on as long as revenue is produced from those mining concessions.
Thank you for that. Darren Pittman asks, is there any shareholder dividend in the stock's future?
Timely question. That's actually the subject of discussions with our board. We have been returning capital to shareholders through a buyback. It's potential that we view a dividend as, possibly the preferred path to continue returning capital to shareholders. So I would stay tuned on that. But the cash flow generative capacity of the business increased so dramatically over the last 2 years. I didn't think a dividend would be something in our future for maybe a couple more years to come. But given how successful our portfolio has been, stay tuned for that, as I think there's strong potential for a dividend in our near future.
Tim Baker asks, do you have the opportunity to invest in a company that is not produced yet in exchange for the royalty contract?
Good question. So when I talked about synthesizing the value in the industry, what underpinned a lot of how we built this company was what has provided the alpha, what's provided the excess returns for royalty companies. So royalty companies have outperformed as an asset class, but what really are the best qualities? And the best qualities is being able to find value, and where you find the best value is third-party royalties. So while you can, what is called origination, go to a mining company, give them capital in return for a royalty, the problem with that is when you're giving capital to a mining company in return for a stream or a royalty, many companies do this. The reality is you're competing against the entire capital stack that whether it's debt funders, whether it's equity funders, and other royalty companies to get that royalty stream. And so our business model allows us to find esoteric sellers all over the world. We bought royalties from automotive parts companies, hearing aid technology companies, prospectors, major mining companies, and everything in between. What we're doing is we're looking for opportunities to provide liquidity to those who need it, or those that don't necessarily care to have these assets on their balance sheet and are willing to make a very fair deal that rewards VOX shareholders.
Wonderful. Steve Sandoval asks, are there certain precious metals or commodities that you model prefer over others?
Great question. Our fundamental tenet is value with long-term optionality. We are looking for the right projects versus necessarily metals. We actually price in backwardation. So what I would really highlight is the difference between our management team and our philosophy and almost everybody else in our industry. We are not metal bugs. We are value hunters. We are looking for the best quality assets that are going to provide the best value now from a return on invested capital standpoint, but also harness that optionality that royalty is inure through having the ability to capture all the upside without being responsible for any additional sustaining costs. So that's what guides us. That being said, what we find is there's more precious metal royalties around the world. And so that provides the best opportunity for us to find value, being that's the deepest pool of assets for us to go acquire. So it naturally weights us to precious metals. That being said, very interesting opportunities, very interesting assets across the spectrum. We have vanadium assets. We've had graphite royalties in the past that we've sold for 4x what we bought them for. So we're very strategic in terms of what we buy, but it's ultimately looking at quality of project and then that long-term optionality and making sure those, we're allocating our capital as efficiently as we can, generating that type of return profile.
Wonderful. Will Ross asks, are the royalties tradable? Can a major come in and buy any of yours in whole or partial?
Look, as I mentioned, we actually sold some graphite royalties that we didn't believe fit our portfolio for what our investors were looking for, but we were able to find them at such deep value that we in turn sold them. That's atypical for us. We're really building what projects to be one of the larger royalty companies over the next 3, 5, 10 years. So one-off royalty sales, they can happen. I would say they're atypical in our industry. I wouldn't rule it out. What I would say is, management from the perspective of M&A, we're very aligned with shareholders. If a major company is going to reward our shareholders, and that is going to maximize long-term value for shareholders, it's something that we'll always consider and always be open to. But in the meantime, we're accretively building our portfolio with some of the best returns on invested capital in the entire industry, or that it's ever seen.
Lee Peterson asks, what's the procedure once you identify a property? Is there a payment involved? What do you look for and how do you close them?
The exciting part of our process is, sometimes you can consummate deals in a matter of weeks. Sometimes it's a matter of months and years. Our process starts with perpetually screening the world for interesting developments over mining assets, and then going into our royalty database to see if there's a royalty over that asset, who then owns the royalty, and then getting in touch with those various royalty owners. And it's that technical screening process where our mining engineers and our geologists are looking for developments on assets that they really like, and then are projecting out what that asset is likely to look like over the next 2-3 years, and where we can find the deepest value. And so once we've found an asset that we like, we're in touch with the seller, we've negotiated a deal, then at that point, you're doing very firm legal due diligence on the tenements, the concessions, the history of the royalty and land ownership, and also, even a deeper dive on the technical elements of this deposit, understanding the risks, also understanding the upside and making projections for that asset. And I think we've been better at that than anybody else in the space over the last 4 or 5 years. But that's how the process goes. And so once we're confirmed across all the legal diligence and all the technical diligence, and all of the documentation is done, then there's that exchange of cash or sometimes shares for the royalty.
Wonderful. Rodney R. asks if you could discuss the profit margin on the royalties and how is that calculated as you evaluate a new deal?
So that's a great question as well. What we look for is meaningful return on invested capital, either from, sometimes we're buying a portfolio of royalties or sometimes we're buying a one-off royalty. We're looking for meaningful return on invested capital, and that's over call it a 3 to 5 year time horizon. Sometimes sooner. We bought in production royalties very successfully, but that's what we're looking for. And I would say the industry as a whole, this will shock many viewers, is really tracking to 0 to 3%. VOX is a multiple on a multiple on a multiple of that. So while we don't necessarily have one hurdle rate for investments, because it does depend on the quality of the asset, the quality of that long-term optionality. Ultimately, if you look at what we're generating, we've deployed about $55 million into royalties to date. We're expected to generate $10 to $12 million in top line revenue this year, versus, as I just mentioned, many of our peers are generating 0 to 2% returns on invested capital. I'll let the viewers do the math on that, but we're exceeding that by a very, very wide margin, and that's underpinned by our competitive advantages. And as I mentioned, that synthesizing of the quality of what really makes a very good royalty company into one business and one publicly listed company, that's what's generating those types of results.
Last question from Lee Wong. How many of these deals can you do? Can you discuss how capital intensive they are? Do you need to raise capital? And what would that bring you? When would it bring you to income?
Well, look, last quarter, we have realized net income periodically. It is, our cash flow from operations is growing significantly. We are looking at potential, inauguration of a dividend policy that still has to go through the board and further analysis. So we have really crossed that threshold in terms of being able to deliver returns back to our shareholders in a very tangible way. So, in terms of what is the capital raising and that type of outlook look like for VOX, it's all very deal dependent. We have what I would say is improved our cost of capital significantly. So whether that's debt, whether that's some equity, remains to be seen, but it's very deal driven and deal dependent. But right now, if it's just status quo, we would not need to go back to the markets. We are generating cash, and we're in a very, very strong position with a tremendous amount of catalysts in front of us.
Kyle, great presentation. Do you have any closing remarks for our viewers?
Well, Anna, appreciate the opportunity to be with your conference team and in front of all the viewers out there. I am very excited about our business. I am very pleased that we had the opportunity to apprise you of the VOX Royalty Corp opportunity. I will tell you, it's very clear that these markets present a lot of challenges, but you're finding a company that's harnessing these challenges to its benefit. You're seeing that in the results that we're producing. We continue to project very, very favorably. It is what I believe the strongest point that we've been in as a publicly traded company, and that's speaking from what has been quarter after quarter after quarter of record revenues and record results. So I'm excited about what we continue to project for investors. The business has never been stronger, and this environment is actually helping us, not hurting us. So for all the investors out there looking for commodity exposure, I hope you'll consider VOX Royalty Corp. We're working hard for you as shareholders, and we believe that we're going to continue driving outside success in this industry.
Wonderful. Thank you for your time, Kyle. Please join us again in the future with your updates.
Thanks, Anna. Will do.
Okay, everyone. Great day so far. We've got more exciting companies coming up in just a second. We're going to take a break. We'll be back in exactly 1 hour. We'll see you soon.